Hello, everyone. My name is Lorenzo Lomack. I'm the Chief Financial Officer of Trillionaire Investors League. We are a stock market investment club here local in Oregon, and I'm here today to share some information with you guys on how the stock market works. Working. All right. So I took a class about 10 years ago where we had to look at the stock market and pick some stocks that we will follow. And these stocks we only follow for about 2 or 3 months as far as how long the class went. However, I did keep the stocks in my online email, so I was actually able to see those just a couple of months ago. So over the course of a 10-year span, I saw some great growth, and I would like to share some of those stocks with you. So I'm going to be comparing three household name companies that I did choose at random when I was in the class, just products that I was using, stores I would go to. And we're only going to be buying 5 shares in each of those companies to show how the stock market works and how growth can happen and you can build equity over time. Starting with Disney. Now, I pulled up this snapshot of Disney stock just from Google. So it's very simple of how you can do research on stock. Now, with Disney, if you had purchased 5 shares in 2010, you would have bought them at $36.22 per share in that company. The total investment, how much money you would have spent, would have been $181.10. Using a buy and hold strategy for 10 years, so we're not going to sell the stock at any point. We're just going to buy it and then hold it. Your equity would be valued at $695.70. That's a total gain of $541.60, buying and holding the stock over the course of 10 years. Now let's go ahead and go into McDonald's. If you had purchased 5 shares in 2010, you would have bought them at $62.28 per share. The total investment would have been about $300. And using that buy and hold strategy that we were talking about, your total equity would be valued at $1,080.75. So you would have gained about $700 on this stock. So that's great. Now I'm going to show you a really, really nice one. So Google. Now Google, if you had bought 5 shares in 2010, you would have bought them at $282.11 per share. Now your total investment at that time, a little bit more money, would have been $1,410.55. And using that buy and hold strategy, currently it would be valued at $7,597.20. So you would have gained $6,000 by buying into Google, because it's currently trading at the time of pulling this, which is around February, about February 18th. It's trading at 1,519 at that date. So those would have been gains at that time. So it's very exciting what the stock market can actually do. So let's just say we had all these stocks in the portfolio, just these stocks, and we bought those 5 shares. We bought those 5 shares. The total investment would have been $1,903. Now, using a buy and hold strategy, it would be worth $14,553. That's a total gain of $12,650. So very exciting if we pulled all that money together in our portfolio. Now, let's talk about what if you had the buying power of 100 shares, like maybe if you were in an investment club. Now, using the same companies, this is what you would have invested. Now, in Walt Disney, would have earned about $10,000, in McDonald's, $21,000, in Google, $151,000. That's a total gain of $183,000. That is great. And that's actually the power of being a part of an investment club, because with us pulling our money together, we have more buying power, so we can get to these shares, so we can potentially get those kind of gains. So thank you everyone for joining in with me on learning about how the stock market works with just these few companies. And definitely, if you were interested in trying to find more information, reach out to us. Go to contact at trillionaireinvestorsleague.com to get more information. Thank you.